Welcome back to another weekly analysis video. This analysis is for the week of November 30th, 2025. As always, we'll start off with a weekly review of last week's price action and then move on into the analysis for the upcoming week. So as you can see here, the analysis that I had called for with price moving lower into here and maybe targeting these did not pan out. And this is a common signature of any sort of holiday week with the type of volume that you get and the type of signatures that you get, which is not clean price action. In other words, this is something that price, in my eyes, should not have done if it was going to move lower. There's no reason for it to come back up into here. So now I'm watching to see what it does in this particular area in here, but I don't have a whole lot of expectation moving forward. But this is why you want to be hands off during the week of Thanksgiving, during the week of Christmas, things of that nature. These signatures that are clean, that are seen in normal price action of what price should and shouldn't do, those go out the window as it relates to any type of trading for a holiday week like Thanksgiving week. So it did the exact opposite of what I wanted it to do. So right out of the gate on Monday, it traded higher. And this here was my first sign that this is probably not going to be, this low is probably not going to be targeted, and it probably won't reach into here if it's coming back up into here on Monday. And we since have remained bullish since. So remember what I said, if it comes back into here and we find support in this area in here, it may want to make another high or attempt to get back up into that high. So that's what I'm watching. I'm watching to see how price behaves in here. But again, it's Friday, 10:30 in the morning here in the United States, November 28th. Not expecting a whole lot going into the close. So the signatures that are usually seen in normal price action, disregard those in holiday weeks like Thanksgiving week. It's not very clean. Keep your expectations low. Very hands off. And you see why. Let's go ahead and move on to the hourly chart. Alright, we're into our hourly chart now, where we see a little bit more of a refined view in detail of price action compared to that of the daily chart. So here we have some of Friday's price action here. Rallied up. Sunday we have the open right here, Sunday, November 23rd, 1800, which is 6 p.m. Eastern Standard Time. The rally in here. Now this is where I'm thinking to myself, all right, if we can stay above here and go no lower than its stop run area, which it did just that, it's going to want to rally into here. So this right here, when it starts trading back into this area in here, that is going to most likely negate any sort of lower price action for now. And we're going to move back up into here. Price did exactly just that. Moved up into there and since have consolidated at the upper portion of this area in here. I'm waiting to see what it does above here. Recall that I initially said that price shouldn't even go above there if it's going to be bearish for the short term to intermediate term. Okay? Shouldn't even traversed up into here, but it did, and here we are now. So we have to constantly balance things out as to what price is going to do and what it's telling us in the chart. So that's what it did. It reached up into here for the week, and as of now, Friday, at around 10:50 in the morning, I don't expect much action to occur from here on out going into the close. Now moving into the 15-minute chart, we see even a more refined view compared to that of the hourly chart. And I want to draw your attention back to 24,786. Recall that I had said that if it were to go lower, I wanted to see it go no higher than this. I did not mention the stop run area, but when I refer to a level, you always have to account for the stop run levels above and below that. So the stop run level above this level would be a total of 162 points from here. Got above that actually found support in it and rallied into the close, consolidated a bit, dropped back down, wick through its stop run area in here. Remember, as ICT has said, the wicks do the damage and the bodies tell the story. Okay? The bodies remained above the stop run area in here, and it rallied into this area. But 24,786 was the main catalyst level that I was working around and did not want to see this gap, this imbalance that it had created, completely closed in. I wanted some of that remaining open and to react off this level. That was the level I had said for the analysis of this week, that I didn't want to see much trading above that level. I wanted to see it come to that level, maybe sweep it a little bit, and then start trading lower. It didn't do that. And because it didn't do that, I had to adjust after Monday's trading to change my bias. And that's what it's all about, is being flexible and understanding what you're seeing in the chart, being objective rather than emotional. You have to be objective in this business, otherwise you won't last very long. So that being said, let's go ahead and move on into the analysis for next week, the week of November 30th, 2025. Alright, we're back on our daily chart here for the weekly analysis for the upcoming week of November 30th, 2025. We're back in this area again. When I was doing my recordings earlier, price was around the 25,380 level, and I didn't suspect we'd move much higher. And we really didn't. We did propel up into the 25,515 area, so we're now at the premium of this particular range in here. Now, if price were to remain bullish, it would need to stay above this area in here, otherwise it's just going to come back down into 24,786. Unfortunately, because price is really not showing me a definitive direction, I don't have a bias this week as to what it wants to do. We're stuck in here. And until it leaves that with conviction, which I thought we had here, but price propelled away from this area in here, and that was an important level, 24,057. It may just be stuck in consolidation. I really don't have a bias. I'd like to see it go higher, stay above the equilibrium of this range in here between 24,786 and 25,515. The equilibrium price point being the middle of that range, which is in here. Okay? That's what I'd like to see. Come through that area, and I want to see price continue higher, but I don't believe it'll do that. This is where trading gets tricky. This is where you have to go down into lower time frames and really work within the lower time frame dealing ranges rather than work within a higher time frame, because the higher time frame isn't telling me much right now. So you have to rely on your lower time frames. So I'm erring on the side of slightly bullish to consolidation, and I say slightly bullish because I still don't think it's done going higher. I was willing to submit to a somewhat bearish bias last week because of this large expansion, because it expanded out of this range in here. That's what I was submitting to. But when you're trading within a holiday week, like Thanksgiving week for example, odd things can happen. Signatures that usually wouldn't be seen are seen, and that's exactly what happened last week. So we're waiting for more information. We're seeing what price does. I really don't have a definitive direction as to where the market wants to go, so I'm purely working within very small ranges on the lower time frames. So as it relates to a higher time frame perspective right now, a daily chart perspective, not much definitive price action at all. So that's where we're at as it relates to a higher time frame bias. Alright, we're back into our hourly chart now, where we see a more refined view. Here's our dealing range that we're working within, 24,786 to 25,515. Now notice how price had an expansion before the close on Friday towards 25,515. That's where I was anticipating it to reach, perhaps going into next week, since we got above this area in here, the middle of the range in here. I do have a slight bias higher. However, again, because we're seeing some weird things happen in price action because of the holidays, because of Thanksgiving, clean price action is generally not seen, and so we see things like we had last week where price completely disregards what should have happened rather than what actually happened. Okay, if we get back in sync with the higher time frame bullish trend, which I believe it's not done going higher yet, I want to see price expand through 25,515 and into this area in here. Find support in this area, so trade through it, come back down, and then rally into 26,244. That's what I'd like to see. 26,244 and beyond, making a new all-time high. That's what I'd like to see. However, again, because I'm seeing not favorable price action, I'm less likely to co-sign on such a bias. I need to see certain things happen in order for me to really get on board with that. And I have processes in place that prevent me from really having a bad week in trading, especially when there's price action like this. Traders can really sabotage themselves in environments like this where it's just not clean, it's just not clear, and you have to be willing to wait. You have to be a little bit more demanding in what you're looking for and demand that certain signatures be there. Otherwise you get chopped up, you lose money out of your trading account, and you wind up not being in a good spot. And I don't want that happening to anybody. So with that being said, to recap, we're in this range. I want to see price stay above it, move through this level in here and into here, find support, and maybe rally higher. Again, because of the not so favorable conditions, I'm not going to be as trigger happy as I usually would be if I were to see something pan out. I'm demanding more to my setups. So with that being said, let's go ahead and move on to the 15-minute chart. Alright, now on our 15-minute chart here, let's draw your attention into here. These equal lows, I don't like how they left that. As price approaches 25,515 going into next week, we need to gauge how it reacts with its relative stop run areas in here. So the relative stop run areas of 25,515 is 162 points below it and 162 points above it. As below, so above. As above, so below. Okay, it's the same. We need to gauge how price trades through the stop run area above it. Okay, if we start rejecting in here and going through 25,515 and through the relative stop run area below 25,515, it may want to come back down into here, into the equilibrium, into the middle of this range between 24,786 and 25,515. That is not good. Okay, that is a classic consolidation signature, which I don't want to see. However, it's something that needs to be kept in mind. You have to be able to anticipate when trading is just simply not favorable. We're in those conditions now, and this is classic holiday signatures, okay, where things just are not favorable. So you have to demand more. So again, I'm demanding that it trades through the relative stop run area and into here. Now, if it trades through the relative stop run area in here, shows bullish signatures, it will trade up into here. From that point to there, that's a trade. Okay? Now, I'm not telling you how to trade or anything like that, but that's something that I would consider, because that is part of the protocols I have in place to be able to say, okay, this happened, now this should happen. It's all a process, okay? And it's demanding more rather than being aggressive and saying, okay, we're trading through the relative stop run area below it. We should reach up into here and then reach up into there, okay? Whereas I'm not trading it from here to there. I'm trading it when it gets above, drop backs down, and then trades into there. That's what I mean by demanding more. Letting price show you what it wants to do when it's in environments like this. You still have to have an edge of anticipation. However, it's better to demand more in these environments. Having a slight edge of anticipation. It also helps to know when you're in a premium and discount. And again, these are things and concepts that I will talk about more into 2026, because if you understand where you are at in a chart, whether it's a premium or discount, then you know whether to be a buyer or a seller. Being a buyer in a discount market, being a seller in a premium market. Okay? So, to recap, unfavorable conditions. So as of now, we have a slightly bullish bias. Again, I don't believe price is done going higher. I still believe that we're going to create an all-time high in the future. That's just my thinking. So, slightly bullish bias. Still on the edge of unfavorable conditions. We have to wait out and see what happens going into the open of next week. We are going into the holiday season, where price action is generally not favorable at all. Again, it's just something to keep in mind, and something that I need to be aware of and that you should be aware of as well. So with that being said, that's going to conclude the weekly analysis for the week of November 30th, 2025. I hope everyone had a happy Thanksgiving. As always, take care, and God bless.